Hello friends, welcome to another session of Tarakki Talks. Today, we are going to be speaking about the NFO of ICICI Prudential Nifty Low Vol 30 ETF Fund of Fund. As the name suggests, it is a fund of fund which invests in an ETF that replicates the least volatile 30 stocks out of the top 100 blue chip companies in India. Why is it important to have an allocation to low volatile stocks? The answer is very simple. The volatility in the equity markets is something which brings greed and fear to an investor's mind and makes us remove the money when the markets are low and put money when the markets are high. In some sense, to avoid this greed and fear and to have a long-term allocation into equities, it would make sense to have a portfolio of 30 stocks. So it gives you diversification into stable companies which are less volatile and allow you to participate in the long-term wealth creation that is offered by the blue chip companies in the top 100 universe. Which essentially again means that as an investor, you would be wanting to stay invested in this fund for as long as you can. The fund of fund allows you the benefit of equity taxation. It also allows you to invest in lump sum or in SIP as per your requirements and as per your asset allocation allows. We have seen that the concentration of stocks also in terms of their weightages is less in this fund because the weightages of the stocks is determined by the volatility itself. Hence, it is normally seen in the last many years that the range of weightage of stocks in this particular portfolio is anywhere between 2.5 to 4.5 roughly on an ongoing basis. And because the stocks are in the large cap space, the liquidity etc. is not a constraint from a replication of the index perspective. Today, if we see the top sectors in this particular index, which is the Nifty Low Vol 30 index, are software, cement, consumer names, auto names. And so you will see that it is a wide spectrum of representation of the many sectors that are there in India. At the same time, the concentration of sectors is also not very high. The top sector being roughly about 16 to 17%. So from an investor perspective, the Nifty Low Vol 30 index provides you with a better risk-adjusted return because it is picking the most stable stocks, the 30 stable stocks out of the 100. And it is something which will also allow you to participate in the long-term wealth creation journey that equities provide with more stability. So friends, the NFO opens on 23rd of March and ends on 6th of April. I believe that this NFO and this index provides a good opportunity for investors to invest and remain invested for the long run, subject to the asset allocation allowing them. Thank you.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.